Hi, this is Matt in Singapore, and this is the second video about Ripple. I've just had a croissant and a green tea. I'm going to work in a few minutes. This is the second video talking about Ripple. Before I dive into more of the details of its products, or what I understand from its products, it's probably a good idea to talk about the area that Ripple is tackling, which is cash management. So what is cash management? Well, this is a basic service offered by banks to their customers. It's actually one of the basic things that customers expect to be able to do with a bank. It's like moving money from one place to another, especially large companies. They want to be able to move large amounts of money to their suppliers that happen to be in another country. So for instance, if you take let's say a cupcake manufacturer, okay, in Singapore, that bakes very nice cupcakes, and for that it uses organic raw cacao from Peru. So it's going to import this raw cacao from Peru. It's going to pay a supplier, the supplier in Peru, with large batches. It's going to send large amounts every 6 months to the supplier in Peru. So this supplier in Peru happens to have a small bank. It has an account with a small bank in Peru that's not very well known outside of Peru. Now, the challenge here is to send the money from DBS, the bank of the cupcake maker, to that little bank in Peru. So, what's the problem? Why can't this be a direct thing? Well, this is not going to be direct because it turns out that there is no global infrastructure for cross-border payments. It doesn't exist. You have such an infrastructure for domestic payments inside each country. There's an RTGS, okay, a real-time gross settlement system, which is different for each country, but allows banks to send large amounts of money to each other very quickly within a single country. But then when you talk about international payments, then it's much less standard. There's no real standardization. There is a standard when it comes to exchanging instructions, and this is SWIFT. I will come back to this later. But in terms of moving sums of money, there is actually no global infrastructure. So what happens in practice? Well, in practice, what happens is that for a bank to send money to another bank, it needs to have an account with that bank. And this is called a nostro account, which is usually in the domestic currency, in the target currency. Now, of course, not every bank in the world is going to have a nostro account with every other bank, okay? That would be too tedious. So what happens is that there's a system of hubs, okay? Some banks are better connected than others, and other banks are only locally connected. So if you take the example of the cupcake manufacturer who has an account with DBS, what will happen? What will happen in practice is that, well, DBS might have a branch. Let's assume DBS has a branch in Peru. So DBS is going to debit the account of the customer and credit one of its own nostro accounts with its own DBS branch in Peru. Then that DBS branch in Peru has a nostro account with a major bank of Peru. Okay, very good. And then now that major bank in Peru has nostro accounts, has local accounts with several little banks in Peru, including the bank of the supplier. So you can have several hubs, okay, one transfer from DBS Singapore to DBS Peru, from DBS Peru to the major bank in Peru, and then from the major bank in Peru to the small local bank of the supplier. So this involves a number of intermediates. Those intermediates are called correspondent banks. Each correspondent bank takes a fee, of course. Because you have those intermediates and each of them has their own accounting system and payment system, well, automatically this adds a delay as well as opportunities for errors. This obviously is not efficient, and this is one thing that Ripple is attempting to tackle.